The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Stocks rally, bonds slump, volatility tamps down for now amid an unprecedented shift in the U.S. presidential race. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. Session highs all across the board.
And some of that's really being led by tech today.
It really is.
Yeah.
Is it sustainable or dead cat bounce? I know Romaine hates it when I say that, but it could be true. All right, the S&P is up over 1%. I say dead cat bounce because last week, obviously, we saw very heavy selling within the S&P, particularly tech, and now that rebound, right? The Nasdaq is up by 1.6%. Haven't erased the losses from last week, but nonetheless, it's worth taking a look. Now, the 210 spread, also the theme of last week was steepener, and now we've moved a little bit flatter. We're now down negative 26 basis points, although we are off the lows of the session there. And I just wanted to point out copper because that does necessarily feel like it's a China play. Hard commodities are getting hit pretty hard, and no pun intended. You're looking at a 3-month low for copper, and you have to kind of start thinking about that in a global growth, China growth perspective, Romaine.
All right, but let's talk about the elephant in the room, and of course that is U.S. politics really driving at least the narrative, if not necessarily the trade. There really is little historical data for how markets should process the unprecedented decision for a political party to jettison a presidential candidate who had already clinched the nomination. So far, though, investors are taking it in stride, partly because of what Stuart Kaiser over at Citi says is the perception that pushing Joe Biden out and pulling Kamala Harris in still represents policy continuity rather than any sort of a sea change. Now, what did change over the past 24 hours, though? Well, is the perception that there is a slightly less chance of a Trump victory and thus a less chance for sustainability of that Trump trade. A modest unwind today in the crypto, energy, and Mexico peso trade, and a modest rebound in solar and EV stocks. Though we should point out, Art Hogan, chief market strategist over at B. Riley Wealth, says some of these so-called Trump-Harris trades are kind of indistinguishable from the broader rotation we had already been seeing, particularly with today's rebound in tech stocks and the continued embrace of small caps, as market consensus, Alex Steele, still remains firmly centered around the prospects for a drop in interest rates.
Which then begs the question, where's my volatility? And in what sector will we see it? At what asset class? And this is one to look at. So it's a little bit messy, but bear with me here. So you have the blue line is the move index that measures the volatility of treasuries. Then you have the yellow line, which measures the volatility of FX. And then the white line, which is the VIX, measures volatility of stocks. Whether or not you like these indices, that's a whole different question. But I just want to point out here, so right around June 11th was when we had the CPI. So you had all volatility kind of really clustered together here. June 27th is when we had the debate, and you started to see Treasury volatility really start to pick up. And then here's what we've seen before. Last week, big spike in the VIX, but now it's really that Treasury volatility that's picking back up. Is that steepener maybe, Romaine, not a foregone conclusion anymore?
Absolutely. Let's pose that question to our first guest, Kathy Jones, joining us right now to kick us off to the close here on this Monday afternoon, Chief Fixed Income Strategist over at the Schwab Center for Financial Research. And Kathy, let's talk about the steepener trade, of course, that it was ostensibly part of that so-called Trump trade. I am curious that knowing what we know now after Joe Biden has stepped aside, Kamala Harris is in, and whatever sort of speculation there is about who ends up being president, do you think there is still legitimacy to the idea that we will continue to see a steepener no matter who gets in office?
Yeah, I do, Romaine, but I think the question is a bull steepener or a bear steepener? So, our expectation has been for a bull steepener, and that is, with lower short-term rates as the Fed eases and long-term rates kind of edging a bit lower, and having a normalization of the yield curve, uninvert the yield curve. Now, if we go forward and we look at post-election, a lot of the questions are going to be what happens with the deficit, what happens with tariffs, what happens with employment, and how does that affect inflation and therefore Fed policy. And I think that's why we got this up and down in the curve trades, because people don't know whether that should be a bear steepener or a bull steepener, if we should have a steepener at all. I think there's a lot of uncertainty because we just have no real good insight into what policy is going to be 6 months from now after we have a new Congress and a new administration.
Well, before we even get to that new Congress and new administration, do you think that we could get a little bit more clarity next week out of the Fed, at least in terms of what they're willing to telegraph to the market about their intentions when it comes to rates and policy?
Yeah, I think so. Comments from Fed Chair Powell recently have hinted that, or really directly said that he's gaining confidence that inflation's moving towards the 2% target. And we will have the PCE numbers on Friday to give us the next reading. We're looking for that year-over-year rate to fall to 2.5%, which is getting pretty darn close to 2%. So I think that we will get that indication, but I think a stronger indication probably will come at Jackson Hole meeting in late August. They'll have had a couple more inflation reports, a couple more employment reports, and we know the Fed is now focusing a bit more on the employment outlook, not just on the inflation outlook. So I think over the next 2 months, we'll get some indications. I'm not thinking we'll get a clear signal from the Fed on the 31st, but you never know.
Kathy, do you think that when the Fed cuts, though, it will be because inflation comes down or the growth is slowing? Because that really will depend on what kind of steepener we see, whether the rotation to small caps really works.
Yeah, right now, I think the major motivation is that real rates are very high. And as inflation comes down, there's room to lower them, irrespective of what happens in the economy. But the Fed has been focusing more on employment, the other side of the dual mandate. And we are seeing some cooling off in the labor market and that upturn in the unemployment rate. So the balance of risks now is much more balanced than it has been for a while. So if we were to see softer employment data, I think that would mean we get that bull steepener. If we still have fairly robust hiring and wages running at a fairly healthy rate, around 4%, then it's more like the bear steepening, not the bull steepening. So employment's going to be the big data.
So is that the time to buy the long end?
I think that timing is always tough, but we've been advocating people add some duration to portfolios. People have just been sitting in the short end because you can get paid over 5% staying short, very little risk. But once a rate cutting cycle starts, it moves pretty quickly. And obviously the Treasury market's already discounted a lot of rate cuts. But if you look beyond the Treasury market, there's still a lot of opportunity to find yields in the 5% plus area that'll last you 5, 6, 7 years. And we think that's an attractive proposition going into what we think is a rate cutting cycle.
Do you think there's appetite for that, though, for that extended duration? I've heard the argument that now might be the time, but you're still seeing people kind of remain at that shortest of the short end of the curve.
Yeah, what we typically see is a lag time. People wait for that to sort of start happening, and then they move their money out. But we know from past history it's better to try and get ahead of these moves, or at least stay up with these moves, because it can move pretty fast. You can watch those. You have reinvestment risk. You can watch those yields disappear pretty fast. So getting some exposure to duration right now makes sense to us.
Kathy Jones, always a great conversation. Chief Fixed Income Strategist over at Schwab Center for Financial Research. Kicking us off to the close here on this Monday afternoon. It's been a wild week for American politics, and it got even wilder over the weekend. President Joe Biden stepping out of the presidential race. Kamala Harris now in. We'll talk about the political and market ramifications in just a second.
All right, plus you got shares of Mattel rising the most in about 5 years on news of an acquisition offer. More on today's Stock of the Hour.
And CrowdStrike still suffering here on the back of that global outage that, of course, got blamed on that company. We're going to talk about the fallout and what CrowdStrike is doing to clean it up and clean up its image. This is The Close on Bloomberg.
Global leaders offering messages of support for U.S. President Biden after that announcement on Sunday that he's exiting the 2024 presidential race and endorsing Vice President Kamala Harris as the next Democratic nominee. Now, one country that avoided officially commenting on Harris's late entry, China. State-backed news outlets and social media users casting her as a weak vice president whose candidacy didn't present a major threat to the world's #2 economy. Joining us now for more is Mary Lovely, senior fellow at the Peterson Institute for International Economics. When it comes to China, what's worse for China, a President Harris or President Trump?
Well, I think probably a President Harris, and I'll tell you why. President Biden has been much more effective in really controlling the flow of U.S. technology to China. The export controls have been biting on China. and on adding Chinese companies to sanctions lists. So I think that the Chinese who made a deal with former President Trump may see him as the easier guy to make a deal with.
Really? Even though there was lots of blustering about Taiwan, even though there's a lot of blustering about overall import tariffs and more tariffs from Chinese imports?
Well, we're probably going to get tariffs, that's for sure. But then we had former President Trump turn around on the campaign trail this week and say that he would welcome Chinese investment into the U.S. EV market. So have the Chinese build electric vehicles here. That's sort of music to the Chinese ears, is what they would like to do in the EU. So, they're not taking Trump at face value. They're looking at what their experience was with him. And he did surprise them, I think, on the downside, but they were able to manage that. A potential President Harris is an entirely different situation. She sees no reason to change the policies that President Biden has put in place. In fact, given her relative inexperience in foreign policy, one would expect that she would continue them, at least in the short run. So I think the Chinese would fear President Harris more than a second term of President Trump.
So, Mary, as we stay on this topic, though, of U.S. foreign policy, I mean, beyond China, which, of course, is probably one of the bigger issues, there's a couple other loose ends that the next president is going to have to deal with, particularly when it comes to the war in Ukraine and really just our relationship overall with Russia. Would there be any material change in our approach to this under a Harris administration as opposed to Biden?
When it comes to Ukraine and our relationship with the Europeans, I think we would not see much change under President Harris, under a potential President Harris. One of the things that President Biden has excelled at during his term is alliance management. He has brought the U.S. and the Europeans much closer, even as he's had to manage tensions in the relationship. For the Europeans, the war in Ukraine is an existential question. And I think that President Harris, who has been schooled by President Biden, will follow his lead on this.
I have to ask you also about the war in Gaza/Israel. And we know that this was an administration, meaning the Biden administration, that had been criticized by a lot of far left progressives for not taking what they thought was the appropriate stance on this issue here. How do you think a President Harris would handle this if she were elected?
Well, Kamala Harris is younger. I think she's hearing the voices of younger people. I think reaction to what's happening in Gaza goes way beyond the far left. I know many people my age who are appalled by what they're seeing. At the same time, she's always stated her staunch support for Israel. So Gaza is a very difficult problem, no matter who is at the helm. But I think we'll see her pushing the Israelis much harder to do something about the humanitarian crisis in Gaza.
Yeah, it'll be interesting to see Benjamin Netanyahu's embrace of either candidate as he arrives soon. It's already scheduled to meet with President Biden. And we did learn just a few minutes ago he's also apparently reached out to former President Trump for a meeting as well. Mary, we'll talk to you again soon. Mary Lovely, Senior Fellow at the Peterson Institute for International Economics, as we count you down to the close just about 45 minutes ago. And it's interesting how politics has really kind of come to dominate this market cycle right now. We always say elections ultimately don't really matter, because at this end of the day, policies are so similar, but this just feels a little bit different, Alex.
On the overall context, yes, but would we have seen the same market reaction if we had avoided Sunday altogether and President Biden was still the nominee, right? We had a pretty steep sell-off in tech. Having a day where you buy it back, not really a surprise into tech earnings, right? Russell still outperformed, but is still doing pretty well. Yeah,
well, it's interesting, though, about the price moves. Is this seems less about, this is more about gaming, who people think is going to win, rather than say, okay, this person's going to be great, this person's going to be bad. And I do think it's interesting how quickly these trades flip around. And I know it's still early, we still have 3 months to go. So a lot of this is probably for naught to begin with, but it's interesting to see the market psychology. I like it.
No, I like
it's
it too,
fun. Yeah.
but I also don't get it. Because why is the VIX not up more? Yeah. Why is the VIX curve not re-rated higher? Like, what is that? Like, what is that telling us? It's telling us something, but what is it?
Yeah, absolutely. Well, stay tuned. Maybe we'll answer that question for you.
Figure that out.
In the meantime, we are going to take a look at some of the big movers on the day. And surprise, CrowdStrike down again. The company's still grappling with the aftermath of that IT failure that grounded flights and upended its share price. Delta still struggling even today to get back on track. We're going to talk to an analyst who actually says that for CrowdStrike, this is just a near-term setback. You want to hear what he has to say. This is The Close on Bloomberg. All right, let's get a view from the sell side. Top calls. So look at the big movers on the back of analyst recommendations. And we start today with Air Products, a downgrade to hold over at Deutsche Bank, which cites inconsistent earnings performance at the maker of industrial gases, saying that lower than expected economic growth in China, that's the culprit. The analysts also uneasy about the resignation of the company's COO. They trimmed their price target to 280 from 310. The shares trimmed down by about 5% on the day. Next up, Celsius, B. Riley, slashing its price target on the energy drink maker to 80 from 110, citing an industry-wide slump that has become broadly promotional, reflecting declining sales in some brands as stubborn inflation forces customers to cut back on those impulse purchases. Those shares of Celsius down about 3% on the day. And let's take a look at CrowdStrike, the cybersecurity company, down for a second day here, struck with a number of downgrades and price target cuts after Friday's massive tech outage affected millions of devices and programs reliant on Microsoft Windows. RBC Capital Markets, one of the firms, cutting its price target down to 380 from 420. You see the shares there down about 13% here on the day. Those are some of our top calls, but we do want to stay with the last one, that price target cut by RBC, because as you should point out, the analyst maintaining his outperform rating on CrowdStrike, saying that he considers this outage a near-term overhang for the company. But given that this was a glitch rather than a data breach, he says CrowdStrike will emerge as a stronger company once the hysteria dies down. Mathieu Hedberg joining us right now, analyst over at RBC Capital Markets. And Matt, let's get right to it here. When we talk about the cleanup, how long is this going to take before maybe CrowdStrike can sort of get the momentum back and get people back into this stock?
Yeah, there's still some unanswered questions around the extent of the outage and any potential ramifications due to customers' lost revenue. But the important thing that we pointed out to clients is that this was not a breach, it was not a data loss, this was an outage, which is very different. It feels to me like the stock is being treated more in the line of a breach than an outage. Obviously, still a serious thing, but we do think over time, this will make CrowdStrike a better company, right, and one that we think will continue to have customers' trust in an increasingly worrisome cyber landscape.
Well, I am curious, though, on that point, though, too, because, yes, it was not a breach, but it was also something that effectively CrowdStrike was responsible for. Yeah. And we talk about a cybersecurity space that is highly competitive and to a certain extent pretty crowded. I know not everyone is a CrowdStrike, but there are alternatives. And the fear amongst investors is that some of these companies will now start to look for other alternatives than CrowdStrike. Is that not a threat?
Yeah, that is a common threat that we hear from investors. The reality, in our perspective, has been for a long time that CrowdStrike is built differently. We don't think there are a lot of great alternatives. There's a lot of legacy providers in this space, and we think some of the fundamental value of CrowdStrike is really in the architecture of their Falcon platform. And so while theoretically there are alternatives, we generally think, given the broad and increasingly broadening scope of the platform beyond just endpoint security, we think it's an increasingly important vendor, not just from a cyber perspective, but from a broad IT perspective. And so we think the threat of vendor switching is lower than perhaps other software companies out there. But that is a key question. What is the impact on potential churn, upsell, discounting? I think these are all things that the market's trying to discount in the stock right now, but we do think the risk of churn is lower given what we think is a dominant platform today.
What about clients asking for some money back to help recover damages? For example, Delta is saying there's going to be a couple more days before the worst of the cancellations are done. That might make it near a week. Delta's going to want to get that money back from somebody.
Yeah, it's a great question, and one that, candidly, we don't have a lot of great answers for. The company's not talking yet in regards to that. One of the, we've talked to a number of partners that we wrote about in the note, things like discounting free credits, things like that to ensure that customers feel that CrowdStrike is really, a true partner for them. But yet, you're right, that is an outstanding question. A lot of these software companies have SLAs in place that handle things like outages and things of that nature. But ultimately, CrowdStrike, we think, is working really tirelessly right now to ensure that customers truly feel like they have a partner in what is a really dark situation in terms of this outage, in terms of how globally interconnected this world is. But that is obviously a question, and I think that's one of the bigger overhangs on the stock right now is the potential monetary ramifications.
Yeah, it's going to be hard in theory to buy the stock until you know what that number looks like. Do we have any idea of how long something like that is going to take?
My sense is that by the time they report earnings, we'll have a pretty good sense of it. Generally, they would report earnings towards the end of August. I think the company is gathering that information as we speak right now. And so, yes, that uncertainty is what we wrote in the note in terms of some of the near-term overhang on the stock. I think once we get more clarity on that and a bit of a perspective on how they think this impacts the back half of their fiscal year, ultimately we think this is a buying opportunity. But nonetheless, the overhang, given some of the questions that you bring up, is what's pressuring the stock right now. But we think there still is long-term value, especially given today's move.
Yeah.
We did cut our target, as you noted, but ultimately we do think this company is built for the long haul. And we think that when we look back on this, obviously it's an extremely unfortunate event, but ultimately we think customers will gain even more trust through this, given how the company reacts to it, which has generally been honesty and transparency early on in this situation.
And so, Matt, just more broadly, though, too, you think that the current structure of kind of how Microsoft and these other clients rely on CrowdStrike for their cybersecurity needs, the idea that you sort of keep that separate, let effectively CrowdStrike sort of take the impact of anything rather than bringing more of that in-house, you think that business structure, that model remains?
Well, it's a great question, too. I mean, I think one of the things that Microsoft talked about in a blog post this weekend was that the entire tech ecosystem needs to look at things like redundancy and backup and just alternative plans. This world is obviously incredibly interconnected. When Microsoft said it only impacted, they think, 8.5 million devices. That's a relatively small number relative. They said it's less than 1% of the total Windows devices. But regardless, it had a profound impact given how interconnected this world is. And so I do think that companies thinking through disaster recovery, backups, alternatives, redundancies, that's all going to be part of the ongoing decision here. Mm-hmm. But ultimately, we've been a big fan from a cyber perspective of a layered approach to cyber, meaning multiple vendors handling multiple potential security threats. Yeah. And so we think that also bodes well for that, redundancy comment.
All right, Matt, we really appreciate it. Thanks so much for joining us on that. Matt Hedberg over at RBC Capital Markets. And that's not even talking about the Microsoft issue there. All right, coming up, how President Biden's exit from the upcoming election is impacting corporations. It's our conversation with Kevin Kajiwara, co-president of political risk advisory at Teneo. That's coming up next. This is The Close on Bloomberg.
And I am firsthand witness that every day our President Joe Biden fights for the American people, and we are deeply, deeply grateful for his service to our nation.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. The first public appearance since yesterday when President Trump endorsed Vice President Kamala Harris for president.
Yeah, wild times. I mean, we throw around the word unprecedented a lot, but it truly is unprecedented now to see a major political party basically change horses this far into the election cycle. We haven't seen anything like it. It'll be interesting to see whether it pays off.
Yep, and it came from the fringe that really moved the needle. And endorsements for VP Harris keep rolling in, and so too are the dollars. Democrats raising more than $50 million on Sunday alone, and today that number steadily topping now $17 million. Here in studio with more on this is Kevin Kajiwara, co-president of political risk advisory over at Teneo. Kevin, the money that was raised in the war chest for Biden-Harris and the money that was raised the last 48 hours, does all of that go to a Kamala Harris ticket?
I mean, it would appear to be so. Her name was on the Biden-Harris ticket to begin with, Alex, and so therefore I think FEC rules allow that money to transfer over. And then, obviously, yesterday afternoon, mere hours after the announcement and the president's endorsement, you could see that the campaign changed its name, and then obviously the new money that's coming in today. Now, that's not to say that the Trump campaign and its surrogates won't try to put legal impediments into that, challenge some of that. But it would appear at first glance like that money will all be able to migrate in her direction. Yes.
Now, you guys over at Teneo had seen the writing on the wall on this a few days before it actually happened. What's the biggest question you're getting right now from your clients?
I think the big question right now is simply that, look, I think as we've watched television over just the last 48 hours alone, it's pretty clear that the world is separated between two different kinds of people. The people who know that they don't know how this is going to all play out, and the people who don't yet know that they don't know how this is going to play out, really, right? I mean, we've got 105 days to go until this election, and if you look, it's been 24, 25 days since the debate. How many bombshells have really dropped that were just completely unpredictable. So I think that the questions that are coming in are about the immediate near-term issues. Is she going to be the nominee? How exactly is that going to work out formally? Who's the VP nominee going to be, and will that be helpful? And those types of issues, and who to write the checks to now. It's more that kind of questioning rather than full-on policy questions at this point. But again, it's we're just hours into this, and we haven't even really heard yet from President Biden.
Yeah, we have not heard from President Biden, and really even haven't heard fully yet from Kamala Harris. I mean, she gave that event at the White House, but in terms of policy positions, it'll be some time. Let's go a few days prior to this, because even before all the rumblings that Biden might drop out of the race, you already had an investor class, and a corporate class for that matter, that I think was somewhat on edge about this election cycle. What do they want to see out of this election? I don't mean personal preferences for candidates, but what are they really looking for out of a government, out of an administration, whether it's Kamala, whether it's Donald Trump? What most do they want?
Look, I think any corporate management, the most important thing that they're looking for, Romaine, is most likely going to be visibility and transparency about what the policy and operating environment is going to look like for them. Companies have dealt with regulation, tax regimes, political preferences for a long time, but you can plan when you've got transparency on what that's going to look like and how consistent that is going to be over time. I mean, one of the challenges that we have had in recent years and with recent administrations, of course, has been more of a reliance on executive action rather than on legislation, which can be undone in relatively quickly, which creates a lot of uncertainty out there. So I think that kind of signaling is what's ultimately going to be important to them.
Are the CEOs and these other executives, when they are trying to sort of figure out what's going to happen here, do you think they're willing to be as vocal as maybe what they were, I don't know, in the last couple of election cycles when employees and investors and everybody was saying, we want to know your position on this particular topic? Because it feels like there's been a bit of a retrenchment in that.
I think, Romaine, clearly, through COVID, through Black Lives Matter, through the 2016 and 2020 election cycles, I think a lot of companies have not only learned how to navigate this better, but they've learned that the hard way, really. And I think there's going to be much more, and it's quite clear, as you have seen up through, say, the June cycle. I think there have been relatively little direct giving by corporate CEOs to one campaign or another. But they are going to lean in more heavily on the issues that are highly relevant to their company and their industry, irrespective of who's in office.
Well, not to mention you had the pendulum really swing from ESG and green kind of back the other way to some extent.
And a lot of the companies that you're dealing with, and that we're talking about here on Bloomberg as a perfect example, are companies that have to operate in all 50 states, red, blue, purple, and otherwise, and their employees and all the other stakeholders are diverse in the way that they vote.
Texas and JP Morgan, like a perfect example of that.
Sure.
To get back to the nitty-gritty for a second, is there any risk that whatever new ticket we have isn't on all the state ballots in November?
So I think that risk has really been mitigated. There was some talk on the Ohio issue that was going to potentially move forward essentially the roll call of the delegates to August 7th or around about. I think it's possible that something could still happen earlier. There will be some legal challenges that are coming out of the out of Trump world. suggesting that the voter is being disenfranchised in some way, that Kamala Harris is going to be essentially coronated. But I think that there is a process in place. The Democratic Party is going to put the mechanism in place on Wednesday. They set their rules back in the 2016 cycle. So, there's always the chance that something could happen to your candidate, and a system has to be put in place to replace them.
And this was probably some of the urgency that the Democrats saw to get this out there now, so you can kind of front run that. A final question here, and it's about the races at the congressional level, because ostensibly a big part of the reason why certain Dems wanted to see Biden out was because they felt like the Democrats as a party were popular. It just wasn't Biden himself. And there was a lot of concern that they would lose control of Congress altogether here. Are executives more concerned about what happens with the White House race or with some of those congressional races?
Well, to a certain degree, all of these things blend together. I think you're absolutely right, Romaine, that there was a considerable concern that that not only was the president in an unwinnable situation, but it was going to actually start to heavily impact the down the ticket, down ballot races, and that in fact what had been anticipated by a lot of analysts that the Democrats would retake the House this cycle, that was in serious jeopardy. So again, I think that corporate executives are positioned well to be able to handle any scenario that comes their way. There's always that argument that a bit of divided government between Congress and the White House can be somewhat helpful. But irrespective of that, I think what they are looking for more than anything else is transparency on where we're going and an understanding that we will have a peaceful transfer of power come January.
All right, Kevin, great stuff. Great to see you again. Kevin Kajiwara, co-president of Political Risk Advisory over at Teneo. And a lot of folks, I think, are really having to recalibrate their expectations for this election. We talk about how we haven't heard a whole lot from Kamala, at least as a top of the ticket Kamala.
Oh, yeah.
But our producer telling us she is prepared to give some remarks to the campaign staffers later this afternoon that maybe we'll be privy to, and maybe we'll get a better sense here of how she's going to run this campaign. Is going to be any different than Joe Biden?
I mean, I also have to wonder sort of what the prep time has been for her. Like, has she been like secretly prepping for this, or is this like literally the last 12 hours, 24 hours, just like everybody else?
Can I answer that?
Yes.
You would hope so, because we've been talking about Joe Biden's age now, seemingly for forever, so you would think that she would at least have been mindful of the potential
Well,
that
we will
she could
see.
have been
We will see on the
elevated
clarity.
here. Anyway, and we should point out this still isn't a done deal. Of course, she's still got to win over the delegates. There may be even some challenges within the party. Of course, we will have full coverage right here on Bloomberg as those developments arise. Meanwhile, we go back to the markets. We go back to the individual movers, and shares of Mattel spiking the most in about 5 years on reports of an acquisition offer, a take private. It's our stock of the hour, and it's up next right here on The Close on Bloomberg. All right, let's take a look at our stock of the hour. Shares of Mattel right now having their best day going back to at least 2019. This on the back of a report that L. Catterton has approached the toy maker with an acquisition offer. Abigail Doolittle joining us right now to talk a little bit more about this potential, I would assume, a take private. L. Catterton, of course, a huge private equity firm, and I didn't even know Mattel was in play. What's going on?
Well, we don't know that.
Yeah.
We actually really don't know whether or not this was a legitimate offer. But Reuters did put out a report earlier today saying that L. Catterton is in talks or had made a bid for them. They also said Hasbro might come forward with a bid. Now, one thing yes, exactly. That's where all of a sudden...
Where's Hasbro getting that money?
Well, that's exactly it, because Hasbro is in a tough place, not to mention the FTC. Although their toy lines, I was having a really interesting conversation with Lindsay Dutch of BI, their toy lines would really be a nice match. But at the end of the day, we really don't know what is going on here. What we do know is the stock is having its best day, as you mentioned before, since 2019 on this chatter. And in fact, Bloomberg reached out to Mattel, and they said they do not speculate on such matters. Super interesting here is they actually report tomorrow.
Yes.
So it's going to be it's a timely moment, because analysts on that call are going to ask what's going on here.
And we should just point out with that Reuters report, I mean, they did not actually provide any details
They provided no detail.
What the valuation, because that's really going to determine whether this goes through, if they had a big premium.
Well, that's
there.
exactly right, because in a way, I mean, if the price is right, they probably would do it.
Yeah.
They had pressure earlier earlier this year from activist investors to sell both American Girl and Fisher Price. So they need to do a little bit of a turnaround there. Barbie last year made tough comps for this year.
I was just looking at the, I was just looking at the stock price though. I mean, this is an awful chart.
Well, the one thing it is, it's holding support, but it's very precarious. Yeah. And today's rumors really bounce it off of that support level. If it can just hold these levels, it may be okay, but otherwise,
is it not a Barbie part 2 or something to say?
To say,
please let there be a Barbie too. But Barbie did really well, and that's also part of the issue when they report earnings. It's a tough comps.
Very tough comps.
So I think that's going to also be really tough as well. But I was looking at Hasbro. It looks like their free cash flow though is still 132 million. That's not nothing.
It's not nothing, but they are in a world of hurt in terms of some of their product lines. But if you combine, like, say, Nerf along with Monopoly, with Fisher Price, American Girls, Barbie, it could really be an ideal company. But again, go back to the...
Is that not an antitrust issue? They can
that's exactly
corner
it.
the toy market?
It depends who's in the White House.
What about the kids, Abigail? Think of the kids.
This is a tough time for M&A for sure.
Yeah. Side note, I lose Monopoly all the time. I'm terrible at this.
Monopoly?
All right. Yeah, I know.
You know what the key to Monopoly is? I'm going to let you in. Pro tip, life hack. Cheat.
No, I would never.
That's why I'm always the banker.
I save that for Qatar.
Just real quickly before we go to break, we do have some breaking news here. Now learning that Warner Brothers has offered to match Amazon's bid for those rights to the NBA. We're going to try to get you some more details on that. My apologies, Alex.
Nope, no problem. Yeah. Ari Wald is also coming up next, head of technical analysis at Oppenheimer. This is Bloomberg.
Back to that breaking news on Warner Brothers Discovery and the National Basketball Association. We're now learning that Warner Brothers has offered to match Amazon's bid for NBA rights. Randall Williams joining us right now, who covers the business of sports for us here at Bloomberg. Just to be clear, NBC, ESPN, Amazon were said to basically have been the winners for this next big long-term deal with the NBA. Warner Brothers now apparently willing to up that bid for the Amazon portion of this. What do we know?
They're matching it. And so Warner Brothers had 5 days from Thursday, I believe, to match the bid for $1.8 billion a year. They're doing that. Now, we're entering uncharted territory because Adam Silver hasn't said much as for what is going to happen from here on out. Could it be a bidding war? Could, did Warner Brothers Discovery offer a little bit more money? Did Amazon offer a little bit more money? Yeah. Amazon was thought to negotiate a deal to keep Warner Brothers out. Right. We'll have to see.
So forgive the really dumb questions that I'm going to ask right now. But so if you have Warner Brothers now saying that they're going to match Amazon, which is $1.8 billion average annual value for those rights, but NBC is looking at $2.5 billion. Are they competing against each other, or do they both win, or what?
There's 3 packages. So ESPN has one that's reported to be $2.6 billion. NBC has the second, which is reported to be $2.5 billion, and Amazon has the third, which is $1.8 billion. Warner Bros. Discovery is matching the third package. And
just to be clear, too, they have a long-term relationship with Warner Brothers already. So, because it kind of strikes me as odd that they are only matching rather than raising the offer. But is the idea that they would be more likely to stick with Warner Brothers, TNT, and TBS, given that they've had that relationship as opposed to Amazon?
Yeah.
Well, there was some tough negotiating that was happening over the last couple of months between what the price was going to be, what was Warner Brothers Discovery willing to pay, and that $2.5 billion that NBC offered. I don't know that was the price that they wanted. Yeah. Maybe Amazon was a little cheaper than what they had offered, but it's clear that they do not want to lose the NBA now. Yeah. So who knows what's going to happen? Could the NBA stay on TNT? Is it headed to Amazon? We're going to have to wait and find out.
We should point out, Inside the NBA, second best show on television after Bloomberg Markets The Close.
Obviously. It's no longer Bloomberg Markets The Close. It's Bloomberg The Close.
Oh, well, I hate this show.
All right. Randall, thanks a lot. Bloomberg's Randall Williams joining us there. All right, let's get back to the markets here because we are headed into the close of trading on this Monday. I'm just taking a look here at the S&P, and it's still up right around the highs of the session, up by 1.15%. Let's get Ari Wald, head of technical analysis over at Oppenheimer, joining us. Now, hey, Ari, I hate to say this. Is this a dead cat bounce today?
No, it's not a dead cat bounce. It's I think last week's the sell-off more of a counter trend step back in what is in an ongoing bull market cycle. How we see it, I think the action, how we would describe it, is a rebroadening of the cycle. Small caps breaking out, S&P equal weight, S&P high beta. So we see this as confirmation of the bull cycle. Typically, rallies with more stocks participating are the rallies that continue. We'd argue we haven't reached peak breadth either. And peak breadth typically leads peak market by several months to quarters. So when you add it all up, we are expecting higher market highs over the coming months.
Meaning that tech and things like small caps can move together rather than there be a rotation?
Exactly. That this isn't a momentum unwind. This is not how we see it. The pullback in tech hasn't been significant. In fact, a few things. One, longer term, we'd argue that the steadiness is underappreciated by Wall Street, that there's been checkbacks along the way. We're having another one, or at least a very near-term setback that's allowing some of those excesses to recede. So for us, technology remains a core position. And I think along with that, you still want to be overweight positions. We're recommending for it within financials and industrials as well. So for us, it's really an offense over defensive story.
How much room does that have to go, Ari? Because we talk about this idea that, at least certainly in the tech space, valuations were already high. And I know if we get a broadening, maybe that balances out on an aggregate level here. But for those folks who are following the technicals and at the same time the fundamentals, are they in sync right now?
Well, let's just kind of think about how the S&P 500, how this bull market cycle has developed since the fourth quarter of 2022. We would argue that it's still below average in terms of both magnitude and duration over this about 20-month period, up 55% from its low point. What we found, 70% of these bull market cycles make it to at least their 2-year anniversary. The median duration is closer to 3 years, up 70%. So we would actually argue S&P 6,000 into 2025 would be on par with fair value for an average bull market cycle looking at history.
Is that uninterrupted, or are we going to see some volatility and, more importantly, some dips in between?
Oh, without a doubt. Bull markets do not move in a straight line. There are setbacks along the way. Kind of thinking about the seasonal trajectory, July, August, two of the best performing months of the year in an election year. So I think it's too soon to play for a more meaningful correction. But I think as we get into September and October, those would be the months where I think where we're going to be more open to what could be a 5% or so setback in the market, or let's frame it like this, the next buying opportunity.
Hey, Ari, if I just look at NVIDIA for a second, that stock up by 4.5%. It came down significantly, but really bounced along that 50-day moving average, and now we're kind of climbing right above that. So it clearly is providing some strong resistance here. What does that tell us about where NVIDIA's stock can be headed?
Well, for this name, after the run that it's had, I think what we've seen in the past, and we saw it last year, is that there could be points where the stock just floats sideways while the moving averages catch up the price. But what could happen in the meantime, there could be other names that pick up the slack. You notice how the FANG acronym has changed through the years. And the reason for that is one stock will be the big driver of gains. It'll pause, and another one will break out and take over that. And you have Apple breaking through levels from a summer a year ago. So I think for NVIDIA, I think a pause would be reasonable within an ongoing uptrend. And I think you're just going to see the rotation even within the large cap growth space.
All right, Ari, going to have to leave it there. Always great to talk to you. Ari Wald, head of technical analysis over at Oppenheimer, helping us count you down to those closing bells. We're just about 3 minutes away from this, and NVIDIA up about 5% here on the day. In fact, pretty broad-based rally, 385 names in the S&P higher on the day, 9 of the 11 sectors, Alex Steele.
Yep, and it really goes down to the point of, did markets actually care what happened over the last 24 hours? Or was this the way we were going to be trading no matter what?
What do you have against cats?
Cats? Dead cats bouncing? Well, clearly I'm wrong. There's no dead cats bouncing. It's just, smooth sailing. But
did we ever get to the bottom of where that phrase came from? Because
there is a thing, and I keep forgetting what it is, so it's clearly not that brilliant.
So someone who was very morbid
about cats?
Saw
Maybe.
A dead cat bounce.
Maybe.
And they decided
I'm sure I'm going to get lots of IBs now into what it actually means. But it does mean that, to me also, is that if you get a dip, people are buying it.
Yeah,
straight
absolutely. And you're seeing stocks not far off the highs of the day here. A pretty remarkable rebound coming off last week's big downdraft here, 1% higher on the S&P 500, 1.5% right now on the NASDAQ Composite, and even the small caps getting in on. In fact, small caps actually outperforming, Alex Steele, now up 1.6% on the Russell 2000 here. Modest outperformance as you move closer to the closing bell right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alex Steele, taking you through the closing bell, a global simulcast. It starts right now with Scarlett Fu in the TV studio, Carol Massar and Tim Stenovic in our radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. A pretty wild day here, Carol Massar. We came in this morning, of course, all consumed by politics, and we end the day here with a focus here on that rotation and a broadening out of the equity rally.
Yeah, back to the markets, right? Our bread and butter, we go. A lot going on, obviously, in the political world, but we've been trying to make sense of it. I think a lot of election watchers would say time will tell. We still have, over 100 days to go before the election. Having said that, once again, I'm drawn to the semiconductor world because I'm looking at some mega outperformance, 3.8% higher on the SOX, the Philadelphia Stock Exchange Semiconductor Index. We get some earnings after the closing bell, but yeah, some real outperformance. I couldn't find any really fundamental news there.
Well, I can't answer that question for you, Carol, but what I can say is what Gina Martin Adams told us a little earlier when it comes to politics and when it comes to markets. It's all about earnings. It's not about politics. It's about earnings this week. Tesla, Alphabet, Chipotle, Coca-Cola, GM,
She said are
Ford.
Phenomenal.
Well, we'll see.
She said earnings so far.
So far, yeah, so far they have.
It's early days, though, right? We can't get too carried away just yet. As well as semiconductors are doing, I'm kind of impressed with the Russell 2000 this afternoon. In the last 90 minutes of trade, you saw the Russell's trajectory change to something much steeper, and now it's overtaken the Nasdaq Composite.
Yeah, absolutely. 8 of the past 10 sessions, we've seen the Russell outperform. That did not look like it was going to be that here on this day, but as Scarlett said, a big push late in the trading session, giving it that edge. The Dow Jones Industrial Average, as well as all of the major indices right now, are finishing the day in the green. More than 100 points higher on the Dow Jones Industrial Average. That's good for about a 0.3% gain. 60 points higher on the S&P 500, 1% up on the day. The Nasdaq Composite higher by about 1.58%, and I'll be that precise here because I do want to talk about that outperformance with the Russell. The Russell closing out the day higher by 36 points, or about 1.6, 1.7% here on the day, with much of those gains coming in the final 30 minutes of trading.
All right, the S&P 500, guys. We did see most names in the index higher today, 395 names to the upside, and you had 105 to the downside, 3 unchanged, Scarlett.
All right, let's take a look at the sector performers today, and a lot of green on that screen right there. And of course, that's because tech, which is the most heaviest weighted of the different sectors, is up almost 2%. Carol had mentioned semiconductors. Those are the drivers behind the tech group as a whole. Communications services getting a lift from Netflix and Alphabet. And industrials making a late run for it. They're up 1.1%. Your laggards, energy stocks down about 0.75%, and staples are little changed.
All right, guys, to the individual gainers we go. Tesla, this was among your top gainers throughout the day in both the Nasdaq 100 and the S&P. They do report earnings after the close tomorrow. Tesla shares finishing up 5.2% today. Elon did make some comments today about having humanoid robots in low production next year and having high production humanoids for other companies in 2026. But other than that, I couldn't find anything fundamental. Stock, by the way, though, little changed on the year.
What exactly are they going to do?
Humanoids. Humanoid robots.
So does that mean like Romaine and I are replaced by robots?
Bite your lip there.
Maybe. We can't replace you.
No, probably could, but.
All right. So let's get to the semiconductor space. I talked about it. Scarlett talked about it. Really some outperformance here. On semiconductor, it is top in both the S&P and the Nasdaq 100. The company announcing it signed a multi-year deal with Volkswagen to be a primary supplier of a fully optimized power system solution for the car makers' next generation electric vehicles. So we saw some outperformance there on semi, up 6.7%. Lam Research up 6.6%. Again, a top gainer in these major indices. It reports earnings next week. Again, I couldn't find any specific earnings, so maybe just a bounce back from some of the selling last week. And then NXP Semiconductor, which should report after the close today, up about 5.5% here. So we'll look for some numbers and see what we get out of that in terms of the AI factor. And also, of course, it plays big time into the auto world. Tim, over to you.
Okay, you got the gainers, I got the decliners. I do want to start with CrowdStrike. It finished the day down by 13.5%. It's been down for 5 days in a row, but the 3 days before Friday, we don't really care about. It's the last 2 days that we care about. Down more than 23% over that 2-day period, the worst 2 days in the company's history. All again, shares being weighed down by that continued fallout from a faulty software update from CrowdStrike. At least 2 firms downgraded the stock after the outage. It affected 8.5 million devices that rely on Windows. Westpark Capital expects, quote, long-term aftermath of the incident, and Guggenheim said its downgrade reflects likely resistance to new deals in the near term.
And we should just point out, just real quickly, Tim, the Washington Post just now reporting that the House Homeland Security Committee has summoned George Kurtz, the CEO of CrowdStrike, to testify about the outage.
Okay. Mark your calendars for that one. One of the continued fallout, one of the companies includes Delta Airlines. We saw shares of Delta move lower by more than 3.5% today. The company did say it expects to cancel more flights this week. It's trying to recover from that tech outage. They canceled 800 flights as of this afternoon. The total since Friday's meltdown, 4,600 flights. Delta did say it was working, quote, around the clock to restore operations, with more than half of its worldwide IT systems relying on Microsoft's Windows operating system affected by the software update.
What exactly do they have to do? I mean, why is this taking so long? It's not just a reboot?
Control-Alt-Delete. I don't think it's just Control-Alt-Delete. I don't think that's what it is.
You think it's more complicated than that?
It's not funny. We actually had a guest on who wasn't able to get. He was able to rent a. He was supposed to fly to New York from Indianapolis. He couldn't get on his flight. He could barely rent a car because when he went to the rental car company, they had
that must have been fun.
That wasn't working.
It took Mike McKee 3 days to get home from Jackson Hole.
Why don't you just stay in Jackson Hole, Mike?
3 days.
For a
That's
few
what
days.
I kept telling him. I was like, get a hotel and chill for 3 days.
Just
but apparently
chill.
the outage is going to have repercussions over the next few days to begin with.
Yeah.
Anyway.
Summer travel plans wreaking havoc on those for a lot of people.
Yeah, it's crazy.
Hey, finally, Verizon. I do want to end with shares of Verizon. Among the worst performers in the S&P 500 today, down 6% on the day. They reported second quarter operating revenue that missed analyst estimates. Fewer people upgraded their wireless equipment. The weak overall growth did mask surprising gains in wireless phone customers and an increase in fixed wireless broadband internet customers. Alex?
All right, taking a look at the bond market here. It was a bear steepener. So you have a sell-off across the curve, but the back end is selling off more than the front end. That's that fancy term. So that spread between 2 and 10s is negative 26 basis points. I do want to point out that we get $144 billion worth of supply this week from the 2, the 5s, and the 7s. So maybe see some pressure on that as well. Carol?
All right, so let's get to some of the stories that are certainly on our radar. One that popped up for us, this is from the Wall Street Journal. Basically, if you've got a 401k, you move to another company and you roll it into an IRA, what happens is you kind of forget about it, and that means you're going to lose a ton of money, right, Tim?
Yeah, if you don't deploy that money and actually invest it, then you miss out on all the gains, of course. So Vanguard crunched the numbers. The Wall Street Journal reporting that Vanguard found that cash-heavy IRAs gave up more than $172 billion a year in retirement wealth that they could have generated by investing in stocks and bonds rather than just leaving it in cash.
Got to roll it into something.
Once you realize those gains, it's really hard to get back in because you're like, I got out kind of near the top. I got to wait for prices to come down. I'm going to buy the dip, but waiting for that dip is a fool's errand.
Yeah, absolutely. And I do sort of wonder, too. I mean, this idea of, like, no one's really checking. Like, that was a big thing that struck me about. I don't know, maybe I'm just obsessive, like checking it, pretty frequently. But it's just kind of weird that somebody's sitting there for months, if not years, and they haven't actually looked. But
that also scares me. Like, I always think it's rolled over, so I don't understand, like, what the problem is. So here's another fun thing. If you did roll it over and you did wind up having more money, maybe you can spend it at Harvard. So apparently there is a $12,000 4-day class where celebrities are fighting to get into, and it's like a 4-day class that you can go to, and apparently people want to go there and do it to say that they went to Harvard. I don't know.
Well, it's being taught by this professor, this expert on branding and marketing, and she uses a lot of real life examples, and so they want to be in on this class and get kind of the secrets. But what's so interesting in all of this is so many people who take the class then go on social media and they're like, I got into Harvard.
I know, but then again, if it was a CUNY, would it have the same cachet?
Wait,
for $12,000?
So execs from Hollywood and Madison Avenue, stars such as Channing Tatum and LL Cool J have signed up hoping to build the next celebrity business empire. So she's helping them, I guess, to build out their branding. It's just kind of wild.
Well, you got
Don't
case
you have
studies.
Agents and things for that.
You got case studies that include Beyonce, David Beckham. I think it was Lindsey Vonn who got The Rock to write her recommendation to get into the class.
Oh my God. Recommendation to get into the class?
That doesn't hurt, right?
Wow, I don't know what to say. You call The Rock and you're like, hook me up with this, and here's $12,000 for a 4-day
Wait,
class.
The Rock writes recommendations.
Hey, maybe he writes them, maybe you write it, and then The Rock signs it. The Rock. Does he sign it The Rock or Dwayne The Rock Johnson?
Dwayne Johnson.
Okay.
How do you think Romaine got this job?
That's right. Yeah.
The Rock recommended him?
Yeah, exactly. It was actually Jimmy Superfly Snuka.
Well, could you just say that again? All right, I guess that's a wrap. All right, our cross-platform on this Monday, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you same time, same place tomorrow. And Alex, you're heading out, but no worries. She's going to be back with us tomorrow as well.
All right, our coverage continues here on Bloomberg Television. Still keeping an eye on earnings, awaiting NXPI, NXP Semiconductor. Xion's out, those shares up. Cleveland Cliffs shares up as well. Cadence Design slightly oscillating between gains and losses. Coming up, a conversation with OpenTable CEO Debby Soo about the state of the restaurant industry. This is Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. A bit of a rebound in U.S. equity markets with all of the major indices finishing in the green. A strong showing by the S&P, up about 1%, but an even stronger showing from the Philadelphia Semiconductor Index, down 3% on Friday, up 4% here on the day. But keep in mind, it still has not erased all of the losses from last week. But as the market tries to find a little bit more of a footing here, whether it's in equities, whether it's in FX, or whether it's in that treasury space here, a lot of it all circles back, not just to the macro, Scarlett, but to fundamentals as well here, and maybe to a certain extent to M&A.
To a certain extent, right? Let's take a look at Mattel, up 15% on the day. The biggest rally since 2019. Bloomberg reporting that the toy maker is confident in its path as a standalone company. And this is after Reuters reported that PE firm L. Catterton has made a buyout bid for Mattel. The company declined to comment on the speculation, but Mattel does report earnings tomorrow, so perhaps it'll say more there. Verizon, the big decliner in the Dow Industrials, losing more than 6% after second quarter revenue missed analyst estimates, so the stock down by the most in about 1 year. And CrowdStrike falling by double-digit percentages for a second session here. Continued fallout from that faulty software update, which caused a glitch for about 8.5 million devices that run Windows operating system. What's notable is the other cybersecurity names that rallied even as CrowdStrike declined. We saw at least 2 analysts downgrade their recommendations on CrowdStrike in the wake of all of this. And just one more mover, that's our top story this hour. Delta, struggling to recover from that IT outage. The shares tumbled as much as 4.2%. Delta says it expects more flight cancellations this week. And this is after scrapping more than 800 flights today, bringing its total since Friday's outage to at least 4,600. Now, by contrast, carriers like United and American have largely recovered. The Transportation Secretary, Pete Buttigieg, criticized Delta, making clear he will hold them to resolving these passenger issues.
I want to get you some breaking news right now. NXP Semiconductors, those earnings crossing the wire. The shares down more than 8% in after hours trading. A cash flow issue might be to blame here. The company saying that in the most recent quarter, its free cash flow coming in at $577 million. The street was looking for $854, so a huge miss on that front here. EPS also a miss, $254. Street was looking for $267. Revenue in line with estimates, but here's your guidance going forward. The company saying that 3Q revenue will be about $3.15 billion to $3.35 billion. The top end of that range is the average of analyst estimates, so that might be part of the issue as well here. The company also giving an operating income forecast that's slightly lower than what the street was looking for. Of course, this is a big designer of semiconductors. Another company also reporting, and this is a software company that helps to design semiconductors, Cadence Design. Those shares also down here in after hours trading by about 2% here, despite the fact that their second quarter numbers beat their guidance going forward for the full year. Also, at least on the low end of their range, coming in a little bit lighter than what the street was looking for. Put that against the backdrop here of that big 4% rally that we had in the semiconductor space earlier today. We'll get you some more details on that in just a second, but we do want to turn now to the world of restaurants here, particularly here in New York City with Restaurant Week beginning. A lot of folks now trying to scramble to secure reservations at the most popular restaurants, and of course, one of the websites that benefits most from that is OpenTable. Pleased to say that the CEO of OpenTable joins us right now, Debby Soo, to talk about the trends in eating out. Always a fun conversation with you, Debby, and always nice to get a read here on whether we're still going out there and spending money at some of these restaurants here. Are you still seeing those trends hold up?
Great to be here, Romaine, and thanks for having me back. We are still seeing that trend hold up. Dining demand is continuing to hold. June was actually up 3% year over year. July is flat. July historically in a lot of cities is a little bit slower. You're in New York City. New York tends to kind of empty out in the summer. So I'm always here to encourage people to go out and support your local restaurants and dine.
Certainly, that's something that people are, would like to do once they have set aside the budget for eating out these days. I'm curious to get your take on what we've been reading about lately, which is reservation bots. When reservations open up for restaurants, it's automated, it's on the website, and then right away they disappear, and then they show up at a third-party website where they're sold at a premium. What does OpenTable do to prevent bots from flooding the zone?
The bots issue can be very disruptive to our restaurant partners. So at OpenTable, we are doing everything we can to help restaurants thrive, and blocking bots or identifying bots is one of those things. We were one of the first initial supporters of the anti-piracy bill here in New York. And that is to basically penalize these third-party operators who are making a profit on selling these reservations that they've secured through bots. And it's not great for restaurants because, you get these bots in, they book everything. They're not able to sell everything. So in some cases, you have last-minute no-shows, which are really, really bad for restaurants. Restaurants don't know exactly who's coming in because the reservation was booked by X, but Y ends up showing up. Right. So it's terribly, and the worst part actually is that the restaurants are not benefiting from that sale. So, right, these third-party systems or platforms are not sharing in that revenue. Mm-hmm. So it's not great for restaurants, and we've heard across the board, especially in New York City, how disruptive it can be to their operations.
Is one solution then for people to put down a credit card number or pay a deposit essentially when they make a reservation?
That's exactly right. That's exactly right. So at OpenTable, our restaurants can offer a deposit. They can put on a credit card hold. So if the diner ends up no-showing or canceling last minute, that the credit card would get charged.
So what does when we talk about just kind of this whole process, Debbie? I mean, there have been some people that have kind of been discouraged. I mean, whether it's the inability to get a reservation or feeling like you're just going up against a robot, or even this idea of leaving a credit card. Some people bristle at that because they feel like if at the last minute they need to back out, sometimes they get charged. Is there a sense here that diners have gotten a little weary with this whole process?
I do think that's true. And this narrative of the impossible to get reservation, I just don't think that's actually what's happening, although there is this story and this narrative out there. In any given city, let's take New York City, there's probably a dozen restaurants where it is really hard to get a reservation, where bot activity is rampant, where the restaurant is consistently filled, even on Tuesday, Wednesday, Thursday nights. But in most cases, there are so many amazing restaurants in New York City, a handful of them really, really hard to get. But everyone else, you can see availability if you change your dining time. So if you're a mom of young kids like me, my preferred time is 5:30, which I know makes me super uncool, right? Because most people like dining from 7 to 9. But I'm happy to take that 5:30 slot at Strange Delight, or at Oscar.
Debbie,
so there's creative ways to get a seat.
Yeah, you're preaching to the choir, Debbie. I've been doing the early bird special since I was.
But that. Yeah, I love that. And so what OpenTable is about, we want to be about democratizing dining and giving access to all diners. And yes, there's a handful of reservations or a handful of restaurants that are about roping off access. But for us, we want to be opening doors. We want to be having our restaurants being discovered by as many diners as possible.
Debbie, very quickly here, what's the pitch you make to restaurants to work with you? I'm thinking of Din Tai Fung, the Taiwanese restaurant, which just opened in Manhattan after years of lots of fans in the New York area urging for one. And they're using their own reservation system rather than something like OpenTable. And their own reservation system leaves something to be desired. What's the single most important thing you say to them?
We lead with product and we lead with listening. So what are the needs that Din Tai Fung specifically needs from their table management system? Is it controlling guest flow? Is it looking for ways to get more guests in, which in Din Tai Fung's case I think is true, since there's always a line out the door in any Din Tai Fung I've ever been to in my life.
Agreed.
So we lead with product. What do you need? How can we meet those needs and help you run your restaurant to the best, in terms of efficiency or productivity, to give you that time to free up your time to offer those amazing hospitality moments that Din Tai Fung definitely offers.
Debbie, really appreciate your joining us today. Debby Soo is CEO of OpenTable. We've got much more coming up on The Close. Time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Kimberly Cheadle, the embattled director of the Secret Service, facing calls to resign from both parties. She testified before the House Oversight Committee. Of course, her agency failed to prevent the assassination attempt of Donald Trump last weekend. She said she apologized to Trump, but she also didn't give a lot of very specific answers to questions posed before her.
Yeah, and you kind of figured she wouldn't here. But again, you're seeing kind of on both sides of the aisle here calls for her to step aside. It'll be interesting to see what happens here. I watched some of this hearing, and it got pretty testy in certain parts here. Obviously, you can't have what happened a week or so ago. You just can't have that happen here in the United States of America. I'm keeping an eye on a big investor, Ray Dalio. He's one of our top people here on the day. Apparently, I don't know if you remember, Bridgewater made this big splash in the Middle East, and they were setting up this whole trust with the Abu Dhabi royal family. But apparently, this is being complicated by Ray Dalio's exit. We know that he's sort of retiring, sort of leaving, but apparently there's a lot of legal ramifications to this, and apparently it's kind of put this on hold right now as they try to figure out exactly, I guess, not just where he goes, but more importantly, the structure of how he's leaving.
Well, part of it is because he signed a non-compete agreement when he left Bridgewater a couple years ago. So whatever happens, everyone's going to be looking at that non-compete very carefully.
Yeah, absolutely.
All right, the third person on tap here is Ed Bastian, the Delta Airlines CEO. He apologized for canceling thousands of flights following the CrowdStrike IT outage last Friday. Delta has been singular among airlines for not yet returning to normal operations.
Yeah. Does he have a non-compete? Because he's had a lot of issues here, and of course, coming off some of the debacle when it comes to their earnings forecasts, and now, of course, this whole outage, which wasn't their problem. I mean, obviously, it originated with CrowdStrike, but of
now
course,
it is.
He has to clean it up, and this is still going on now on this Monday afternoon. Mary Schlangenstein joining us right now, who covers this for us here at Bloomberg. Talk a little bit more about this, and give us a sense here, Mary. I mean, you understand this better than anyone. Why is it taking so long for Delta to get back up to normal?
Well, Delta said this afternoon that about 60% of its IT systems are on the Microsoft Windows platform, and so that they're saying they have a broader impact overall. But the critical thing is that they haven't been able to fully restore their crew management system, which is what ties their pilots and flight attendants to the planes. And so when you get behind in that system, it's very, very hard to get caught up. And they haven't yet fully restored that system.
That sounds kind of familiar to what happened with Southwest over Christmas 2022. I know that obviously bad weather played an initial role, but then they couldn't figure out where their crew was, where their jets were, and that took days to unscramble.
Right. It's the same issue that you basically lose your planes and you lose your crews, or you can't pair them together. And it does take a long time, because every time there are more flights canceled, then you have more to reschedule. And if your software isn't working, then it's really almost impossible to do that.
So when we talk about sort of these systems, and I remember when we had the big Southwest Airlines thing, and everyone kind of made fun of them because they were, still using like Commodore 64s or something. It raises the question here of how cohesive our travel system, our airline system is, whether it's booking, whether it's getting the flight attendants and pilots there on time, or dealing with the flight schedules themselves here. Are we going to see a more meaningful redo of that technology, or is there just not enough appetite, and more importantly, not enough money to do that?
Yeah, it's sort of a mix, because the airlines have been known historically for just patching together all of their IT stuff, because it's built on very old legacy systems. But more recently, airlines have been replacing a lot of that stuff. And so, it's hard to think that they're going to go back and now replace again. They won't do that. It's too costly and it takes too long. But I think you have seen a trend toward upgrading these systems.
All right, Mary, great stuff. Always great to talk to you, and great to see you again. Mary Schlangenstein there, who covers the airline sector for us. And yeah, I'm a little bewildered by this. I know she just kind of explained it to me, but I'm still kind of scratching my head why this has to take this long.
Yeah, absolutely.
Yeah.
I mean, you wonder whether it's a case of Delta just bad luck, unfortunately, or their computer systems need upgrade, need investment, the way that Southwest did, and they kind of ignored it for years.
Right, but where's the transportation secretary? Because when Pete Buttigieg talked about that, it was all about, we need to have this major upgrade, not just for Southwest, but for everybody. And it raises the question that it's something like this, something that's simple and singular can completely shut things down, and 3 days later, you're still trying to clean it up? Something's
and the rest
not right,
of this
Scarlett.
week, too, not even just 3 days later.
Yeah, it's crazy. All right, Scarlett Fu, this is your favorite part of the program, where I get to indulge my nostalgia
and
here.
I make wild guesses.
Yeah, wild guesses. We're going to look back in history at the Bretton Woods Agreement. Came to an agreement today, and of course that set the U.S. dollar's pace on dominance. A question before we go to break. What percentage of the world's currency reserves are in dollars?
The majority.
All right, let's open up the history books. This day, July 22nd, 1944, the 3-week-long Bretton Woods Conference ended with an agreement by 45 nations for unprecedented multilateral economic cooperation, a crucial launching pad for the world's post-war financial prosperity. That conference, held at a somewhat dilapidated estate up in rural New Hampshire that had been mothballed for almost 2 years prior, would make history several times over, particularly for the United States, which leveraged its newfound military dominance into monetary dominance as well. Remember, the U.S. became the world's largest economy all the way back in the 1870s, yet the British pound remained the dominant currency for decades to come. Bretton Woods, it changed all that for good. While best known for creating the International Monetary Fund and the precursor to the World Bank, the conference's lasting legacy has to be the creation of an open, rules-based global trading system underpinned by mechanisms to keep exchange rates stable. That last part is key because it came with a U.S. government pledge to convert the dollar into gold at $35 per ounce as part of that stabilization regime, which by default made the dollar the global monetary standard. Now, that monetary mechanism of Bretton Woods largely dissolved within 25 years when President Nixon suspended the gold convertibility. But the dollar by then had already seized the throne. And even in an unpegged floating rate world, investors, multinational corporations, and governments alike embraced the dollar more than any other currency, which leads us back to the question of the day. What percentage of the world's currency reserves are in dollars? The Bank of International Settlement estimates more than 80% of foreign exchange transactions are in dollars, and the IMF says 59% of global currency reserves are in greenbacks, about 3 times the share of euros. That disparity is more than academic. It gives the U.S. that so-called exorbitant privilege that allows it to set interest rates lower than it might otherwise be and allows the government to fund budget and trade deficits in perpetuity. But of course, nothing ever stays the same. And after 80 years as king of the world, many investors are anticipating a future where the dollar's role is diminished. But that's a question of whether it would happen organically or do you need another Bretton Woods to shake things up again? Scarlett?
I did guess the majority, so that put me in the category of anywhere from 51% to 100%. So, yay, I was right. Speaking of shaking things up, both Democrats and Republicans working overtime to sort out their next moves now that President Biden has pulled out of the November race and endorsed his Vice President Kamala Harris. House Minority Leader Hakeem Jeffries spoke earlier about having Harris on the ballot.
Vice President Kamala Harris has excited the community. She's excited the House Democratic Caucus, and she's exciting the country. And so I'm looking forward to sitting down with her in person in short order with Leader Schumer, and we'll have more to say about the path forward.
Joining us now for the latest is Balance of Power co-host Joe Mathieu. Joe, big endorsements, and that's something that Kamala Harris has been collecting since President Biden's tweet yesterday over the last 24 hours. Big endorsements are great, but they're not the same as delegates pledging their votes to her to secure the nomination. Where are we with the delegate count for Kamala Harris?
Well, this is a great question. She's got about 2,000 delegates who will be in Chicago, and she's just about halfway there at this point. to be honest with you, we saw some very important state delegations turn over in her camp today, including Florida, including North Carolina. Ohio meets tonight, and this is something that she's going to be working on here in the near term. But I would just point to endorsements today. It's important that Hakeem Jeffries did not actually endorse her in that news conference. And we heard from a lot of them today, including Nancy Pelosi, which many saw as the biggest and most important name that was really Pelosi leading the charge to get Joe Biden out of this race. But Hakeem Jeffries and Chuck Schumer, we have not heard from yet. They're going to be meeting, as he just mentioned, with Kamala Harris tomorrow. They're very reluctant to show that they're taking part in some sort of a deal or a coronation, even though that's really what it feels like. We're going to be talking just about an hour from now with Congressman Wiley Nickel, a Democrat House member who just came over to Kamala Harris's camp. So she's still making progress here in the House. She has a majority of Democrats in the Senate. Yeah. Let's see what Hakeem Jeffries and Chuck Schumer say tomorrow.
But in terms of the coronation, too, I mean, you've had a lot of people who, in theory, could potentially vie for this have already basically said, we're behind Kamala, whether it's Gretchen Whitmer or somebody like Gavin Newsom. I am curious about her running mate, her potential running mate here. There have been a lot of names floated, including on your program. I know the Pennsylvania governor, Josh Shapiro, has been in there, the Kentucky governor, and then Mark Kelly out there in Arizona. Do we have any sense here into which way she would lean? And more importantly, I'm curious, Joe, as to what you think would be most important for her to choose in terms of the type of VP that she needs in order to win the election.
Yeah, it's really, it's hard to say that the old rules apply in this case. Does geography matter? Is it important to get a Pennsylvania or a North Carolina in the column? Surely we're looking at Mark Kelly because he's in Arizona. There's also the question of balance when it comes to gender, when it comes to race. This is a very different starting point here for Democrats than when they were dealing with Joe Biden here in the White House. And they have the luxury of knowing who Donald Trump is going to be running with here. That's why we're looking more closely at an Andy Beshear or a Roy Cooper here because of J.D. Vance's roots when it comes to rural America. But I don't know that we're dealing with the same equation that we were before. They're going to start vetting Democrats now for that role, and I wonder how much time they have and if they can wait till Chicago to unveil a running mate.
Absolutely. Joe Mathieu, co-host of Balance of Power, a very busy man over the past couple of weeks here. You can catch him at the top of the hour right here on Bloomberg Television. We continue the conversation right now with Kim Wallace, Senior Managing Director and Head of Washington Policy Research at 22V Research. And everyone's now trying to figure out, assuming that Kamala does actually get the formal nomination, how she would do out there on the campaign trail. And as you know, Kim, there's been a lot of criticisms of Kamala when she was vice president, and even when she ran for president against Joe Biden in the primary a few years ago, that she just didn't connect the same way with voters that, say, a Joe Biden did or even a Donald Trump did. Is there any credence to that criticism?
Well, the people with those perceptions would tell you that there's credence to it, and the experience historically shows that Vice President Harris, when she was in the Senate, did not differentiate herself as one of the top movers and shakers within the Senate, if you will, the connective tissue of the Senate. As you point out, Romaine, her primary campaign in 2020 did not turn out victorious.
Yeah.
The questions of the vice president's role within decision-making of the White House and her stature within the White House are going to go on probably longer than this campaign. What's important now, and Joe sort of laid this out, the next week is important in terms of maintaining momentum with endorsements, and the 2.5 weeks after that, her appearance on the stump will be very important. The Klieg likes are going to be hot and persistent on the vice president through the nomination process. And then we get into 2.5 months of a very compressed general election. Yeah. There's going to be very little space for her to avoid white-hot attention.
And given what we know about her, at least what we know publicly about her since she's been VP and even when she was running, given the fact that she's black, Asian, and a woman, it raises the question as to who she should have alongside her on that campaign trail. And I know in the past, people have said that VP candidates don't matter as much. Is that going to matter more, though, this time for her in this particular climate?
Well, I think it's probably a long time before people will say VP candidates don't matter. Look at the current circumstances. And so, yeah, I think it's critically important whom she gets to run with her. All of the names Joe mentioned and the few that he didn't mention are viable. The vetting process is going to be done under intense scrutiny and in a short time frame. But what she has going for her, the vice president, is enthusiasm renewed in the last 24 hours, and that's backed up by the 2020 coalition that elected Biden and Harris, very much interested in not having former President Trump come back to the White House. That's unifying going into the convention in ways that are probably fairly strong. It's then on the vice president to deliver and the managers of the convention to deliver a very smooth operation that appears fair, open, and democratic, as most people are saying, and then have her out on the stump telling people why she wants the job and what she plans to do if she gets the job.
So I'm curious what she plans to do when she gets the job. How much of the Biden policy platform do we presume Kamala Harris is going to champion, especially when it comes to issues like regulation or trade policy?
Scarlett, here I think she's got another asset. In an objective analysis, President Biden's tenure will go down as successful in certainly the industrial policy suite of infrastructure, chips, climate, also known as the Inflation Reduction Act, unfortunately. There are a lot of people who are drawn to the way the Biden administration has managed the U.S.-China competition. And there are more than a few people in the Democratic Party who believe Biden and his team's vision of competition policy, that is how antitrust laws are enforced, is attractive and remains attractive. And so she's got a good base to start from. There have already been murmurs within the Democratic Party for the last year and a half of the so-called care economy, from elder care all the way down to child care. My guess is she would pay attention to that. And there's been a lot of focus by Democrats and Republicans on pharmacy benefit managers in terms of costs to the overall Medicare system and then the quality of care beneficiaries receive. I think that's a broader discussion about healthcare and what some people see as the commercialization of healthcare over the last decade or so.
Thank you for detailing all of that. I'm curious also, Kim, from where you sit, does she have any big boosters from Wall Street or Silicon Valley? Given that she was a senator from California and before that the district attorney for San Francisco, I'm just wondering which big business leaders have her ear?
I have to say I do not know the answer to that. I would say that the former Speaker, Pelosi, will be an important conduit to those voices and their money. And so we will find out in the near term. And I would imagine that the vice president, if she's successful in capturing the nomination, of course, will make herself better known to several factions within the party that may not know her as well as she would want them to before Election Day.
Good stuff. Kim Wallace, Senior Managing Director at 22V Research. I'm sure we'll be checking in with you in the weeks and months to come. And Romaine, I just saw this headline, and perhaps you guys already talked about it, but we had shown how much the different Democrat PACs had gotten on the first day, right after Joe Biden had announced that he was stepping down.
Right.
The Kamala Harris campaign raised $81 million in 24 hours.
Yeah, it'd be interesting, too. I didn't quite get to ask him this, but we know this isn't an election, and Mathieu was kind of alluding to this. This isn't an election that's really going to be decided on the traditional things, the economy and policies. This is a lot of can you get out the vote, the emotion, whether you can connect with people. And that's kind of what I was trying to ask Kim about, because that was the criticism with Kamala. I don't know if it was a fair criticism, but that was a criticism that she didn't really connect in the same way that Joe Biden, who was more folksy, and Donald Trump, who has a certain type of charisma, where he connected with people. And so I wonder who she puts alongside her on that campaign trail that maybe has a little bit more of that connection.
Also, it's going to be a truncated campaign season, right? It, in fact, resembles more like European snap elections than it does a typical American presidential election. Yeah, because they only have a couple months. I am too. Can we go with that?
Instead of this 2-year, 2.5-year drawn-out thing?
So, I mean, she and her running mate, whoever he or she may be, will probably be doing things separately and not together on the stump, right?
You think it could be a she?
I mean, there's a lot of people talking,
a double
but
woman ticket?
I don't know. Is America ready for 2 women on the presidential candidate
I don't think
ticket?
So.
I don't know. All right, let's take a look at how markets markets closed on the day. The S&P 500, you can see they're climbing 1%, a lot of that due to semiconductor companies, and you can see the Magnificent Seven up 2.3%. We get the first of the big ones reporting earnings tomorrow, Alphabet.
Yeah, I'm kind of curious about this. As you pointed out, too, while we were talking, there was news on Alphabet. Remember they were going to get rid of the third-party cookies over at Google?
Oh, yeah.
Yeah, now they're backtracking on that,
What?
at least according to the Wall Street Journal.
No.
So I'm going to ask them about that on the conference call tomorrow. But you're right. The real heart of earnings season really kicks off now with those big tech companies.
All right, this is the close on Bloomberg. Looking ahead to a big week for tech earnings with Google parent Alphabet reporting tomorrow after the closing bell. We will, of course, break it down for you as soon as that crosses. But in the meantime, we want to bring in Laura Martin of Needham to tell us a little bit more about what we can expect. And Laura, one of the big issues, of course, and it has been for the past couple of quarters, is AI and how these big tech companies are monetizing AI and how it's showing up in their revenue. For Alphabet, how is that going to show up? Is it going to show up in the search business, the YouTube business, the digital ads business?
So the most important threat that they have is that it's adding to the cost of doing a search, because the cost to do a search using these large language models is about 10 times the cost of just doing normal Google search. So we really want to focus on the revenue growth, but also what's happening with the cost margins here. And then secondly, CapEx. How much more money, like CapEx estimates are up 15% in the last 90 days. What's happening with the capital investment required, which doesn't hit the P&L yet, but eventually it shows up in depreciation next year of these huge. So we really want to look at CapEx as well.
When you think about the spending and the CapEx on Gen AI and everything that goes into it, what kind of trajectory do you see it going on? I mean, are we at the peak yet, or have we not yet peaked?
No, arms race going on between Microsoft, OpenAI, Amazon, and Alphabet. So I think these companies will spend $100 billion, truth be told, on specifically the Gen AI server farms and infrastructure to support generative AI, which will come back to, they'll pay for it over 10 years. But in the near term, I think the capital spending budgets are not at peak levels. And I wouldn't be surprised if they go faster than they went up last year, last quarter.
Are you comfortable with those spending levels, Laura? I mean, when do we start to see the material impact to the bottom line from all that spending?
Right. So it will show up in depreciation probably starting a year from now, but they'll spend a lot of money. Then next year they'll spend more the year. So that means depreciation, which is hurting your earnings per share, goes up every year, probably for the next 3 years. But it's mission critical because there's going to be, I think, 3 winners of the cloud. And these 3 winners, they are in a land grab. If they don't grab these capabilities now, the other 2 will win, and they'll basically take over the cloud business. So you basically have to keep up with the Joneses if you're one of these 3 companies and invest in Gen AI and cloud, which is a cloud-based service.
I do want to talk about a little bit here about management structure here with Ruth Porat stepping aside, or I guess moving up, we should say, to a certain extent from her finance role, and Anada Shakenzi taking over. Is there a sense here that, at least in terms of their financial team right now, that this is kind of the team that's ready for this new world order, if you will, when it comes to AI, the cost structures associated with that, and the need to actually show returns?
So it's sort of an unfortunate timing because Wall Street really cares about a CFO that can say no. And they really like Ruth. Wall Street really likes Ruth because she has been able to say no to sort of the Google empire of spending. So we now have a new CFO. And so we're going to take a couple of quarters here to figure out if she's just a yes person or if she can actually say no. Because these big tech companies just always want to spend money. They have huge margins and they just always want to spend more money. So we have to see if she's going to allow that or if she's going to draw the line and say, no, we care about return on capital and free cash flow. And unfortunately, we just have to see her in the seat for a couple quarters to figure out who she is.
Does her pedigree coming from a big drug maker, which also would, in theory, has very high capital expenditures and other research and development costs, does that kind of help her case a little bit?
No.
No. Okay.
I don't think so, because none of those analysts will carry over. None of those analysts who have her reputational thoughts in their mind are coming over to the advertising business or the big tech business. So it won't benefit her. She'll have to start over developing a brand relationship with the analysts and investors in this very different space.
Laura, you're saying investors want to see if this is a CFO or this is someone who can say no to spending. What about the return of cash to shareholders? In recent quarters, we've seen a lot of these big tech companies start to pay dividends, start to buy back even more of their own shares. How critical is that to investors this quarter?
Not at all. Not at all. I think this is the biggest negative of Apple, which is it's basically telling you, look, we don't have anything better to do with our money than return $110 billion to shareholders. Like, Wall Street doesn't want the money back. The minute you give it to us, we have to then go spend it to get above, beat our benchmark. So if you have a generative AI play, which admittedly pays off over 5 to 10 years, Wall Street would rather have you doing that with the capital than returning capital in a 5%, return environment, because generative AI should pay off 10x, if it works. So no, we'd rather have you. We whine about CapEx and costs rising, but at the end of the day, if you're returning capital to shareholders, it means you don't think have a future in generative AI. That isn't better.
All right, Laura, I'm going to have to leave it there. Laura Martin over at Needham, a closer look at Google, Alphabet, if you will. They're scheduled to report earnings tomorrow after the bell. We're going to set you up for some of the other potentially big market-moving events over the next 24 hours when we come back after the break. This is Bloomberg. All right, let's push ahead to some of the potential market-moving events over the next 24 hours. A lot of earnings on tap, Scarlett Fu. We start before the market opens tomorrow. UPS, one of the big ones, scheduled to report.
Yeah, it's a big cross-section of different companies. And UPS especially will be looking at what demand looks like for its packages and how much companies are spending, how much consumers are spending, really.
Yeah, I'm also interested in seeing kind of what we learn out of GE and Coca-Cola. Obviously, two very different companies, but both have kind of had their issues. Maybe a little bit of a read on some of that discretionary spend, and with GE on the industrial side as well. And then we turn to after the bell, and this could get interesting. We were just talking about Alphabet, but a few other companies reporting as well.
Yeah, Alphabet will be critical because it kind of sets the tone in terms of all the companies that rely on the cloud business and the search business. And Tesla will be reporting as well. That'll always be entertaining.
Always be entertaining. They'll always feel like we never really learn anything because they report all their monthly numbers. We kind of know at least what they're selling. It's just a matter of kind of how they report it.
It's all about how Elon Musk frames everything, right?
Yeah, if that's perfect.
How many times do you think he'll say robo-taxi?
How many times do you think he's going to say humanoid robot
there you
to
go.
do something else? But it'll be interesting to see kind of how investors react to it, more importantly here, because we talk about a stock I think a lot of people have really started to be divided on whether there's more juice left in the tank or not here. And we also get some economic data as well.
Yeah, the Richmond Fed Manufacturing Index and existing home sales will be coming out after the market opens for existing home sales. There won't be any Fed speak because they're on media blackout.
I know you're broken up by this,
but
yes, they go into the quiet period. It's kind of hard to believe. We got a big Fed meeting basically a week from now almost here. That's really going to throw into the mix right in the heart of earnings season. Of course, we'll have full coverage of everything that happens to move the markets right here on The Close, right here on Bloomberg.